In a country where the stakes are high, where power is scarce, and the future hangs in the balance, one sector determines who rises and who gets left behind. The Nigeria's energy sector. A battlefield where capital is slow, infrastructure is fragile, and failure rate is high. Yet, in the chaos, a new generation is rising. They are not waiting for change, they are building it. Meet Dr. Yinka Opeke, the visionary who took on one of Nigeria's oldest, deadliest challenges, dirty cooking fuels.
And can't we have like a mobile app, like a Uber type thing whereby I can order from the comfort of my home? So that was really like how I started.
In a nation where 120 million still rely on firewood, charcoal, and kerosene, she dared to ask, what if clean cooking could be smart? The founder and CEO of Smart Gas, she's turning LPG access into a tech-driven revolution. Smart meters, digital payments, data power distribution. This is entrepreneurship with courage, with impact, and with fire. And then we have Ishaq Bolarinwa, the man rewriting how Nigeria thinks about renewable energy. In a country losing 29 billion every year to unreliable electricity, he founded Amfani, a platform organizing the entire renewable market, bringing trust, structure, and financing to homes and businesses desperate for power. He's not just building a company, he's building a new energy future.
It is not that hard, in my opinion, to get started. Now, sustainability after you start is a different conversation.
So 2 innovators, 2 visions, 1 mission to transform Nigeria's energy landscape. 1 customer, 1 system, 1 breakthrough at a time. So welcome to the Energy Act Podcast Season 2. Reportedly, over 65% of SMEs financing applications in the energy sector gets rejected. 65%. And there was a time when we were on a panel, we spoke about bankable projects.
Yeah.
So it helps me think, what are the banks seeing that we are not? And this is just on the table. What do you think? I know this is not your issue.
What are the
What do you mean not my issue?
No, maybe you have plenty.
You don't know whether the banks are looking at me now. I don't have money issues. Please.
Maybe you have.
Please, I have.
Well, if you don't mind me going on this one, what are the banks saying that we are not? I think it's, if it ain't broke, don't fix it. That is the mentality of most banks I've sort of come across in sub-Saharan Africa generally. So, Dami, you have a situation whereby, you have some sort of a creative idea in the space, or you're just coming as an SME that is not even necessarily in energy, but you need an energy product, and you're trying to get financing, right? The result is usually the same. To give an example, I walked into I won't mention their names because we are trying to still work with them. But I walked into a Nigerian bank in April this year. I was invited for a meeting to speak about what we do and what are our pain points, how could they help. And the branch manager, she was quite fantastic. She was very open with me and honest with me. And that was on a Wednesday. And she told me, we have an investment committee coming up in the next few days. If I bring what you are doing as a company or what your customers want from you, from a financing standpoint as a company, it's going to sound good, but I don't think it's going to pass the first stage. And I was like, oh, wow, okay, why? And then she goes, this is not something that you're used to. And when you have an investment committee and you have like 100 or so ideas, you want to quickly get through. So the thing is, are we, now when I say we as in Nigeria as a whole, or maybe the government, or maybe the regulators, are we giving the banks the opportunities to be flexible or innovative in what they're doing? That's number 1, right? Number 2, in situations where the banks don't necessarily see an initial benefit to what you're doing, is there a regulation in place to help them mitigate the quote-unquote reduced ROI that they might get from engaging you at the start, right? Because whatever business it is, especially energy that I keep saying is the mainstay of any economy, whatever business that it is, right? If it's new or if it's innovative or if it's not necessarily bringing in the profit that you require at the start, but you know that there's something here, we need external factors to also help. Otherwise, if you're a financier, whether you're a bank or an individual, I'll just go, oh, my buying and selling has worked for me. Why should I come to you? You know. Now, speaking specifically about SMEs, we cannot use the same paintbrush for every wall. It's not possible, right? The bankability of Nigerian SMEs or African SMEs have been so underrated, right? We are such a very hardworking group of people that our default rate as a company, as I'm proud to say, they are very low. But looking at it from the outside, you wouldn't expect that because, oh yeah, I'm giving this person money, they're not paying back. But if you're able to sit down with them to actually have conversations, structure it specific to each, maybe not each individual because that would be too much, but each specific group of people, that would help. Where this 65% percentage you're talking about, I think is a lot higher, by the way. To be honest. It starts to reduce because now you're speaking their language and they're speaking yours. Because if you're a financier as a bank or an individual, the most important thing is I want my money back plus more. And trust me, Nigerian SMEs will give you your money back plus more. But they won't give you if you just have the same criteria for everybody. It's not going to work.
That's deep.
Exactly.
I didn't mean it to be, but
that's deep.
Yes.
Okay.
Yes. You're right.
Wow, that's a lot to think about. Do you have anything to add?
Yes, I think I agree with him, for sure. I would, of course, because I'm not speaking, I'm not representing myself, I'm just saying the opinion generally, I'll be double-mouthed about it. Just like he has said, the banks are for profits, right? And the major thing that can bankrupt a bank is bad loans, debts and things like that. So understandably, they try to apply caution. But there's also that part where a number of banks are so profit-driven that they're not patient to understand the concepts of that business, right? They don't really and that was his last point, when he said they really don't understand the concept, the viability of the projects. And SMEs are also the mainstay of the economy, right? So you can't use the same criteria for everybody because you can't throw away the baby and the bathwater just because some people are defaulting. To be honest, some people, like you said, will pay your loan and they'll pay the interest and pay a whole lot more, and they scale, right? So it's hard to get loans in the banks, that's the truth. But it's doable. A lot of people are getting it. They start by building very small relationships. They start by, borrowing 100,000 to 500,000 to 1 million. So there's relationship over time. Yeah. And to be honest, as silly as it may sound, your account officer makes a very big deal too. If you have an account officer that really believes in your project, there's a way, because I've worked in the banking sector before, and I have very good account officers, they'll really go above and beyond, to put you in front of the right people who you can sell your products to and all that. But on a final note, I would say that it would be nice for the banks to do a whole lot more than what they're doing. They are declaring a lot of profits, first quarter profits, very staggering numbers and all of that. I'm always seeing all those debit alerts, all those charges of maintenance of this or that, So to be honest, it would be nice for them to do their own. But I understand the fact that integrity is a big thing in Nigeria. Yeah. They talk about the big C's when you have, character, credibility, just a few things, and a lot of Nigerians, have proven not to be so credible in so many ways, right? So I understand that. But again, my point is there can be other measures that you can use, to assess someone. Collateral is a major thing that really makes people that makes them not qualify for it. Are there other things you can collateralize? Are there, just to So for me, I think a lot of SMEs are doing great things. They're just looking for support to leverage, to scale. And of course, that will affect the bottom line of the economy because that way they get to hire more people, they get to build more manpower, human capital development and all that. And of course, I also feel like the governments can do a whole lot in that sector too because in the energy sector, for example, there's been conversations around single-digit loans, from Bank of Industry, from Nextname and a few other places, just to promote, gas adoption and all that good stuff. At the end of the day, a lot of them, they're just theory on paper or it's just a select few that gets it. So it's a whole lot of things you have to unpack in this whole financing thing. And that's why for those who are not able to, they can either scale based on cash flow, which was what we started doing, reach out to family and friends. Some people can even do crowdfunding, they can do bootstrapping. So there's a whole lot of other options you want to start looking at, even grants. And then one last thing is we have to start putting our papers, our books in order. A lot of SMEs, we don't do that. They commingle funds, they are paying these payments in my personal account, business account. So we have to stay informed. Back to what I said about leadership, right? You have to know what the tax laws are saying. You have to have your compliance documents, And the men are very good at that. I would say that. I'll bring the gender into it now. Men are really very, because they're very ambitious, very, sometimes they collaborate, to get their papers together so they can present a very united front, have some SPV they put together. Women are usually not as assertive as that, right? So it's a lot of all those things. But is it doable to assess the funds? Yes, a bit harder, right? Because of the terrain and the people and so many other factors.
That's interesting because you mentioned something which was leading to my next question.
Oh my
God.
I'll stay with you. I must have seen your questions.
I'll stay with you because you said single digit loans, right? And it's known that, it's between 25% to 30%.
Yeah.
And I don't know how you're going to answer this, to be honest with you.
I don't answer it now. I was answering it.
So you can ask it
now.
You can pass it to him.
It doesn't mean you'll be answered.
No. Okay.
When does this, make you unreasonable to be an entrepreneur because of cost of capital? Because 25 to 30.
It's something. Yes. It's something. Yes. And that's why I said, again, you have to know your business. At the time we started Smart Energy, Smart Gas, we were Smart Gas at the time, we were doing LPG. The whole gas business was a lot more profitable than it is now, right? So it made no sense to go to a commercial bank to go and get a loan when your margin on the LPG is what, right? So you only have to look at the single digit loans, right? So it depends on your... It all depends on your kind of business. Right now, I know that my company, we're trying to get there's this promo that one of these car companies are doing for electric cars, and it's a December promo, and they're giving very good rates and all that. And we asked for the rate. I think the rate is about 38%. That's crazy. And I said, okay, if I pay back within, it's meant to be a 3-year loan.
38%.
And I'm like, if I'm able to pay back in 1 year and I'm paying into my principal, I hope I'll not have to pay all of this money, And they said, oh, of course, so my point, 38%. What business are you doing that you are getting a loan from the bank at that rate and all that? So before we start jumping into getting loans, and people will say, oh, all I need is money. I know my business will grow. All I need is, it's not really that. So there's a whole lot of things that you need to think about, So it is what it is. For me, what I can't change, I just look for how to navigate it, right? So if the loan is too expensive, what are your other options to it? And again, that brings me to when you're doing business, you're doing it right, and you're making sure that you have the right visibility, because people are watching, people are saying anything that has to do with gas now or grassroots. Randomly, people just keep sending to me, Yinka, is this you? Was this your company that did it? Just because you are top of mind. So when you're doing all those things, it's not because you want people to patronize you. It's just because you want them to know you are creating the impression, this is my line of business. So you have already created credibility. So sometimes when you just go and meet some people and say, you know what, I'm trying to do this. I already have X amounts. Can you give me 30 million, 100 million? You'll be shocked how help will arise, right? So it takes a lot of intentionality when you are just doing things generally.
Yeah. Thanks. So Dami, for my take on it, let me go back to an additional answer to the previous question, and then I'll link into this. We talked about, your question was on banks and the SMEs. While we all kind of understand that the banks need to do more, right? We also need to do more.
Yes.
As companies. Now, what do I mean by that? One thing that we realize at Amfani, because one part of our business is something we've called the supply side part of the business, right? Now, on the supply side part of the business, we sort of realized that there are a number of very brilliant mini-grid developers in Nigeria today, right? When it comes to knowing their stuff, they know their stuff. But that's not enough, right? You need to build a business model. You need to engage with communities. You need to actually execute the project, right? Now, it is usually very difficult for somebody that doesn't know where to start from. Because for you to walk into the banks, for you to start building the relationship with your account managers, as you said, you need to even know that you need to build that relationship in the first place.
True.
So we realized that we decided to put something we called an ADF, which is the Amfani Development Fund, right? And that fund is pretty much to get mini-grid developers from 0 to 1, from 0 to bankability, not even project execution yet, right? And then we had another fund that we added to it called the Infrastructure Fund, which is, from 1 to scale, right? But that 0 to 1 is very simple, right? Creating SPVs with mini-grid developers where there is a certain amount that we've put together for community development, for business model. Oh, you want to do a mini grid in Opeke or Osogbo or somewhere in Kebbi, for example, right? How do we get your solution to the point where you can now engage the bank or engage the financial institution? That helps them to the point where the bank is even willing to listen. So while there is a lot of, angst, I'll say, with banks and the likes, there is also a responsibility for the likes of the three of us on this table, right? That thankfully, with our career, our experiences have given us the opportunities to see what needs to be done. How do we bring everybody else along profitably? Because we run businesses, right? How do we bring everybody else along? So just to add to that. Now, going back to the is it the craziness of the interest rates?
Interest rate.
Our DFIs, like the BOIs, we have to give them credit on this, right? Because we know the commercial banks are driven by, CBN regulations, right? CBN regulations are driven by, the monetary policies. There are some things that we can't, it's not worth fighting because it's just, it is what it is, right? However, by virtue of the work that the BOIs and the DBNs and the Frexims and the Nexims and the AFDBs and the likes are doing is creating the opportunity where there is a little bit of quote unquote suffering at the start because, they're like, I could give rates at 30 something, but I'm giving it at single digits. But there's a reason why they're doing that because at the end it works. At the end, there is such proliferation of whatever it is that you're doing that the profit turns over and over again. And once you're a business that is making money, whatever country that you're in, you're paying more taxes. There's a general positive effect, right? So the rates are a little bit high, of course, but we don't have to go to those banks if, especially, you are not making more.
To cushion.
Exactly, because like she said, just because you want money, not all money is good money. Not all money is good money. But the opportunity that the financial institutions, the DFIs particularly, are putting into place would also help. And I think they are helping. Again, it's going to take a while. It's going to take a while. More people need to be aware of this. And not just aware, more people need to know what to do. And if you already know what to do, it can bring other people into knowing what to do without necessarily, breaking your back on it. Create an agreement, create an SPV. Okay, if you get this is what comes to me. All above board, make it profitable for you. And then the more businesses make money, the better it is for the economy.